Hey guys, welcome back to my channel. In today's video, I want to talk about my investment goals or my investment strategy for the year 2020. It's a new calendar year and a new tax year, so this is a great time to talk about it. And the reason why I want to talk about this today is because no one ever taught me personal finance and investing. I never learned it from my parents, sadly. Obviously, I'm not going to learn it in high school or in university. And I've just stumbled through probably a third or close to a half of my life, and no one ever explained to me finance and investing. I had to learn it from YouTube, which is why now that I am officially a YouTuber, I feel like I need to pay it forward. Anytime I can talk about finance and investing and help other people save and invest money, I want to take that opportunity. So let's just talk about my numbers. I'm going to tell you exactly what I saved and invested in 2019 and what that means for my future and how much I plan to save and invest for this year. The first and most important thing that people should have in order to build wealth over their lifetime is to open an IRA, an individual retirement account. And prior to last year, I did not have one. I went the first 34 years of my life without ever giving this any thought or consideration. No one told me to do it. Nobody ever recommended. I literally watched a YouTube video and said, this seems important. I should probably do this. So I did the research, and you can watch other videos. I'm going to make a separate video in the future talking about IRAs, but I decided to go with a Roth IRA, and I opened one with USAA and one with Vanguard. I wanted to try two different ones and then decide which one I liked more. And what ended up happening was Charles Schwab bought USAA's wealth management accounts. So my brokerage account and IRA with USAA got transferred to Charles Schwab. And Charles Schwab is excellent. I highly recommend them. They have great customer service. I really like their user interface. Their debit card and checking account is fantastic. And there are lots of great companies out there that you can do business with in order to open up an IRA. Fidelity is another company that people highly recommend. Just make sure that whatever company you're going with, they have the lowest expenses, the lowest fees, and you personally like using their interface and you think they have good customer service. And once again, the reason why the Roth IRA is the most important investment tool you can make is because it allows for tax-free growth over your lifetime. So you pay taxes on your income today, you then invest it through this IRA, this Roth IRA. You don't pay taxes on what you earn year to year, and then when you pull it all out, once you're 60 years or older, everything you pull out, it's tax-free. The government can't tax anything. Now, your IRA is just like a brokerage account. You can buy and sell almost anything you want, Bitcoin, gold, stocks, and I'm a personal believer that you should, with your money, you can do whatever you like. However, I've read a couple books on personal finance and investing now, and I'm convinced there's no reason to do anything other than an S&P 500 index fund. An S&P 500 index fund is a mutual fund that people can buy into, and then this mutual fund buys proportional shares of the 500 largest companies in America. That way you're diversified, you're protected. Yes, the stock market will go up and it'll go down, but if one company like Sears or Blockbusters goes bankrupt, yes, those shares become worthless, but you still have 498 companies carrying your investment forward in time. When we go on Vanguard's website, I'm just in the VFIAX Fund, the 500 Index Admiral Shares Fund. This fund is fantastic because the expense ratio, the cost to operate this fund that I'm paying, is 0.04. Vanguard is famous for their low expense fees. You're never going to find a lower fund with a lower expense ratio than 0.4%. No, 0.04%. And you can see how this index fund performed over the last year. It was up 31%. That's a little high for a single year. Obviously, this has been a good year. And then over the last 5 years, 11%, and then 10 years, 13%. I don't want to get greedy and bet on individual companies like Tesla or Uber and try and 5x my money in 1 year. I'm more than happy to take, my 10% average is what the S&P 500 index fund averages. I'm more than happy to take the average of the entire growth of the US stock market. My next investment was the Roth TSP. TSP stands for Thrift Savings Plan, and this is the government's 401k. Anyone who works for the government, including myself in the military, you're able to pay into the TSP, and it operates pretty much the same as a 401k. I contributed $11,800 this year. I didn't max it out. The max number was $19,000. I got more than halfway. And in the TSP, I do the exact same thing as with my Vanguard mutual funds. I invest everything in the C fund. The C fund stands for the Common Stock Index Fund, and it's the S&P 500 fund. How is it averaged this year? It's up 31.45%. And when you look at the performance of this fund since inception, 1988, it is up. It averages over 10%. Once again, with your money, you can invest it however you like, but I like the simplicity and the reassurance of just an S&P 500 index fund, and I'll take my 10%, thank you. Beyond that, I did open a brokerage account with Robinhood, and I put in $3,000. I tried day trading, swing trading, doing stocks, all that stuff. I honestly hated it. It was giving me anxiety, constantly checking my phone and seeing the little ticker go up and the little ticker go down. So I decided after a month of playing around with it that I hated it, and I took that $3,000 and I put it in my brokerage account with Vanguard, and once again, I just put it in S&P 500 index funds. So my total investments in the last year, 2019, was $20,800. Now, what does this money mean for me in my future? I don't plan on seeing this money again or touching this money until I'm 60 years old. And aside from the brokerage account, with the retirement accounts, once you're 59 and a half, you're eligible to start pulling money out of your retirement accounts. And a simple compound interest calculator can do the math of what will be in that account from my $20,800 investment last year. I'm currently 35, so let's give it 25 years to grow. At an interest rate of 10%, I will have close to $250,000 in all of my accounts. Now, 10% is a little high if you want to factor out inflation, so you can chop off 2%. And then you can say, well, global growth might slow in the next 30 years. So let's take it down to 7%. In today's currency, my investment will yield back to me, in today's purchasing power, $112,890. I think these numbers are fantastic. They're very encouraging. Once again, I didn't start investing until last year, 34 years old. If I had started a decade earlier, these numbers would be a lot higher. For these calculations, we're assuming that I'm not contributing anything else. Let's say I just stopped adding money as of last year. It's fun to figure out at what time interval does money double, and it's called the rule of 72, where at a 10% interest rate, a 10% return, your money will double every 7.2 years. At 9%, it doubles every 8 years. At 8%, it doubles every 9 years. At 7%, it doubles in every 10.2 years. So anybody who is investing and they're 8 years younger than me, and let's say they're getting a 9% return, they only have to put in half as much money as I do today, because they're investing younger, in order to have the same amount of money as me when I turn 60, because I waited till my 30s to start this. I don't know what your personal situation is. Obviously, everyone's situation is different. It's never too old, never too late to start saving and investing for your future, for your retirement. This is something that I'm going to be talking a lot about on my channel in the future. Now, what are my investment goals going into 2020? More of the same. I just want to max it out. So the contribution cap for my Roth IRA didn't increase this year, so it's still $6,000. I'm ready to go. I want to put that money in right now, so I will max out my contributions to my Roth IRA again this year. And then the contribution cap for my TSP, my government 401k, did go up $500, so I can contribute up to $19,500 this year, which I am set to do. That's my goal. I really want to. That'll bring my retirement contributions up to $25,500 this year. So we factor in what I put into my retirement accounts last year plus this year, and we do the calculations again, this time for 24 years, I will have close to $500,000 in my retirement accounts if you want to assume 10%, and I will have close to $250,000 if you assume 7%. Anything beyond that, and I'm just going to save that money and put it in a high interest savings account. The reason why is because in 2021, I'll be changing bases, moving to a new state, and I would really like to buy a home. I'd like to purchase my first home ever. Renting, when you do the math, kind of is like throwing money away. In short intervals, it does make sense to rent, but I want to start purchasing homes at every base I move to and then live there for as long as I'm stationed there. But then when I PCS, when I leave, rent it out. That is a great way long-term to build wealth, and that's something that I'm looking forward to and I'd like to do in the future. I can always use a VA loan to buy a home, no money down, but there is a fee associated with that. So I would actually like to get 10 to 20% for a down payment so I don't have to use a VA loan, because I think I can get a lower interest rate not using a VA loan. Okay guys, if you like this video, give it a thumbs up so the algorithm knows it's good. In addition, what are your finance and investing goals for 2020? Leave me a comment down below. I love hearing from you guys. And if you haven't already subscribed, consider subscribing to my channel. I post weekly about military and finance topics. And until the next video, take care.